Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this particular wrap-up is for the evening, as we're now on, where am I now? Tuesday? Yeah, December 5th, 2023, just getting on to 6:30 p.m. Central Time. And whoa, this is your work week. Now, what do I mean by that? It's not where you're going to work. It's jobs, all kinds. Today's JOLTS data, next ADP, Challenger Gray, and then Friday we get the all-important U.S. report on jobs. Now, the JOLTS today did show that we lost in offerings about, 700,000 jobs. And we see that people are doing what in the report? Sticking with what they've got. Last, they're not asking for wage increases. Those days are pretty much over. The people sticking with the job are saying, I'm sticking where I'm at. They just gave me my bumps in pay, and that's what most people got one way or the other. And they're hoping that that's enough at this point. Now let's hold on to that job. Do you really think it's going to be easy to go out and find a new job at Christmas time? I don't think so. So people stay put. And employers, do they keep all the ads out at the Christmas? One of the reasons the ad number's down is probably not. Most big companies have hired for Christmas, and most people aren't looking to change jobs at this time of the year. When I used to run the ads to hire, I'd go back in January and put them out, but certainly not in front of December. Number one, I don't know if I'd be in the office, so those are ways to look at it. Now, the battleground is crystal clear. Forget all the noise. I hate to say it, forget about Israel, forget about Ukraine, forget about the budget right now. Yes, that is what you're going to see on the news all day long as to how everybody's fighting. But that's not what the market's going to be battling about. The market is battling now is to everybody guessing, and I use the word everybody. What is the next move by central banks? The market today is pricing in that the European Central Bank is going to do next year 1.25 point declines. 3 weeks ago, Ms. Lagarde, 4 weeks ago, no, maybe we'll pause, and then she went to the pause. But the week meeting before that, that wasn't even on the table. And this is how fast things are starting to change. And our own governors are saying it is getting to be that time because they are seeing the productivity, other numbers are starting to come down in the euro. Now, in the U.S., how many cuts are we pricing in? 1.5 points. Yep, bunch of cuts coming in. When are they going to start? Well, there's your battle. Be it Jefferies, Goldman Sachs, Morgan Stanley, it doesn't matter who you're going to watch, okay? Is it March? Is it May? Is it June? They're all doing it, and they're building it already into the markets here. Understand what they're doing, and what you're fully doing is you're taking the bonds and the notes and you're discounting those numbers right now. Now, when we look at the weekly chart of the S&P, you're down for the week 0.4%. Not very much, right? Not a very big correction. And honestly, if you didn't have this name on it and you looked at this, you would say, gee, that market just going sideways. Which way is it going to go from there? That should be your question. Which way is it going to go from here? That's what I'd be asking. When I widen the chart out a bit, I get the pattern of higher lows, and I've still got higher high, and with the action I just got higher lows. Now that can change if the market suddenly takes out 45.53, and then the market would have lower highs, lower lows. But you're at that consolidation. You're trying to make an awful lot out of noise, and why do it? It's the hardest thing in the world to trade. If the market drops, the support as I see it is 45.44, right back here. If it rallies, the Bollinger Band is the resistance at 46.37, and some guy I know named Ira had that pinpointed for you in the 45.50 to 4,700 level when we had that inverted head and shoulder that I showed so many times. So that makes sense, but here's my problem. And it is a problem, a big one, a scale 1 to 10 at 10. If you lose the bullish embedded reading by the red line closing under 79, it did not do so today. It closed at 70. Oh, wait a minute, did it? Yeah, earlier when I looked at it, they must have adjusted. I must have caught the last quarter was 79 and a fraction. So you lost the embedded reading. It's under 79. The way I teach charting, you have to be out in longs. You are now looking, unless it re-embeds with both numbers going and closing over 80 tomorrow only, that before you go up for that high, the odds favor strongly you're going to go to the 18-day average of closes, all right? So am I bearish? No. Why am I not bearish? Why am I looking for a break? First, momentum loss is why I'm looking for the break. But anytime, the way that I teach charting, you're over the 18-day average of closes, you have an automatic bullish bias in the market, and you're looking for potential buys, not sells. So it's keeping me this way. Put my hands in my pocket and don't pull the trigger to buy the market here unless it re-embeds. It can only re-embed the day after it loses it. Take the enhanced Bollinger Band course, IraEpstein.com, and go there. Momentum and Bollinger Bands together. You did this already right here. So if we step back as a team and we go back a few days right now, I'll bring you right in through here. Okay, this is it. So last Thursday, market's still okay. You lose the momentum here. To me, before you go back up and go through the most recent highs, the market, I think, is going to head down to the 18-day average of closes. Kaboom, you got there on Monday. Today, a little bit of follow-through. Not really, just hanging. So the market has had what we call a bull market correction. Is it bearish? Not yet. The market is certainly working off being overbought. No numbers left back over 70. So I have a market that is neutral there. The swing line, and you hear this from traders on TV and market analysts, the market's got a pattern right now of lower highs, lower lows. They spit it out like they've said it since they were born. But it means you're in a correction. But where could that end? The 18-day average is the logical spot. Now, if the market gets bearish from here, and I don't have a signal to do anything yet, potential support all the way back at 15,470, 15,392. We then come to the Dow. Now, the only market that still has the seasonality in place to the upside, the Dow. And it's also got the embedded reading. So this is the market that is still the strongest at this point in time. And the guys that are trying to buy the Russell because it's going to be great for them aren't wrong yet. You heard me. That's an unusual statement. You've got the embedded reading. So down here is where I think they're going to look at it if the red line stays over 80. If it drops back under 80 and it gets there, all that the market will then be doing is saying it wants to get back within those confines. Temporarily, as crazy as it sounds, because of the rotation going on in the market, they might be buying in the Russell and selling in the S&P and the NASDAQ. In the 10-year note, be careful. Is the market getting ahead of itself? It could be. There's something else brewing big time. Look at the 18-day average and look at the 100. They're coming together. That could be a bullish crossover in this market that just keeps the bull play fully alive. 5-year, doing it as we talk. Right now, live, on channel, you know what I'm saying. 18 over the 100. That's friendly. Embedded reading, bull action still. Dollar index, bear market rally or the beginning of something bigger? Don't know. You came into the resistance at the combination of the green, the 100-day average in here. What set this up? Again, if you haven't taken my course, do so. Your slow stochastics will not look like mine. So if you think you're going to put yours on and they'll work, I'll give you a secret. They won't. At least not the way mine do. All right, so here's the market, 2152. My work is screaming before you go back under that, the odds favor. I'm going to make a run to the 18-day average of closes. Is it saying to be long? It is not. What is it screaming at me? Don't be short. You're under the 18-day average or under the 100? No. And you just hit a combination back here of the Bollinger Band and the 200-day average. So you spent a short 48 hours underneath that. You came back and you've lost the momentum. Now, I'd get bearish again if the red line closed under 19. It doesn't. It goes this way. I think it's a lockup, L-O-C-K, that it's going to go into this 18-day average minimum before it gets under this low. That's what happened. But the work did its job. Price often is not the leader. Momentum is often the leader in charts. Is it every time? Of course not. Nothing's all the time. Need proof? Look at the gold market, $100 range yesterday. It's not the way it works all the time. Eurocurrency, my eye goes oversold, no trend, higher high, lower low. It's now testing. It came through real easy, the first challenge of the 200-day average. Now, for you out there that are my subscribers, I had trouble and told you I can't have you buying that first challenge of the 200-day. We don't look like we did the wrong thing. But that's the first challenge. Now the game gets interesting. What is the next play setup? It hasn't told us. British pound. You lost the bullish reading. I'm going to take you back here. For me, different than you, I can take the name off a chart and I'll trade the pattern. I don't want to know the fundamental. I want to know if there's market reports. If that's a currency, I don't want to maybe be in a report or an S&P or whatever. But barring that, this is what I want to know. And when I look at it and I say, you just lost the embedded reading before you go up here, I don't want to be long anymore. The odds favor right now, 125.14 is probably where the market's headed. The market today isn't there. We'll see if it hits it shortly, but that's a trade that's unfolding. In Bitcoin, I've done my job. Send me your research money. I told traders right here, you can't play the chart. If you want to own Bitcoin, either you got to just buy it. Don't call it a trade. You heard me say that last week. I began doing that. It's called an investment. It's like Nvidia. You went to the Bollinger Band in Nvidia today. It's what I was telling traders yesterday, and today it happened. I said, if you get there, the big boys are going to buy the Bollinger Band. They're not going to pay attention. The only thing I use a lower Bollinger Band for is covering shorts, never going long, unless you have an event. And the event here is ETFs, and the event in Nvidia is Nvidia. It is the AI chip. And we'll see what happens. But up here, there's a number. Be careful. Nothing grows to the sky. The 45,000 level was a count level that I had. And for all purposes, you're at 44,440, and you hit tonight 44,835. And I was telling traders under 39,000 what I thought would happen. Every now and then I get right. I get plenty wrong, believe me. In Brent versus WTI, it's just drifting sideways. Now you're down to the lower band. I did my job here. When this market went and they were going, they're going to, in the OPEC meeting, voluntary cuts, they're cutting all this. I said, the word voluntary in this manner means they're going to lie to you. And you have gone in no fast order, $8 lower. I should say fast, 4 days. You collapsed. Today, Mr. Novak from Russia, yes, we might even, come January, extend through the first quarter our cuts. But Russia's a liar. They say they'll do their 300,000, and we can prove they don't. But now they'll do it. So you got to understand the players to understand the game, who's doing the talking, when they're doing it. They're talking, trying to talk the market up, and the market ain't buying it. And of course, in the U.S., we have Joe Biden doesn't know what the hell he's doing, and he's telling you he's buying SPR. If he were really buying it, and he did it at the price that he said, you shouldn't be down. The market has no faith in him. He and his energy secretary should retire. They don't know what they're doing. Give the market credibility. Back a year ago when you said you were going to buy under 70, when the election was coming, you do it. Did you? Did you? You didn't buy any because it didn't suit your needs. Now, well, I got an election coming, Joe and Bob and Ira, and we're going to do this. We're going to set things straight. Okay. So here we are with the 200-day average in here. Nothing is friendly, but they're all getting oversold. So they're not going to fall to zero. This is an unusual December in terms of weather. Be careful. It's unusually warm. Could this be the new climate? I don't know. Chicago doesn't seem to get snow anymore. Tomorrow, it's going to be hard to believe we're going to be in the 50s for December 6th. I'm usually shoveling snow or wearing something on my face because it's so cold. That's how I grew up in Chicago. It's not that way anymore. We're missing palm trees, but not much more. And you can see how the market has come down, and you still have your embedded reading. We are not burning the amount of natural gas we need. Now, we get numbers on Thursday. They'll give us an idea as to how much we have in stock or don't have. I'd love for you to try my full research on me, a free gift. If you haven't tried it, please come on over. Let me give you the twice daily written commentary, I'll throw in the access to the Spider and the futures videos. I charge for a year, just for this, $600 a year to get this. So I'm going to give you a few weeks free if you want to give it a try. You don't have to, by the way. I don't want a credit card. You're just signing up for it. If you want charting software, I'll give you the charting software. But then we need a bit more information because the exchange is not us require. We have to do certain things so we can give you just the charts that I'm using. And I think you'll love it. It'll do stocks, futures, options, great option strategies. I am not an options trader, as you probably can see. I have enough trouble being right or wrong, let alone trying to guess betas, deltas. I've done it. Never was good at it, okay? So I walked away from it. Most option traders will tell you they lose most of their trades. I want to be right more than I'm wrong. I'd rather trade a futures contract. IraEpstein.com, free offers. Move your cursor to the top is another way to get there, or call my staff the old-fashioned way and they'll set you up. I'm Ira. I'll see you first thing in the morning or in the Spider ETF, which I'm going to shoot just now. Take care.